Hello everyone. I hope you're doing good mentally and physically. So guys, in this particular session, we are going to cover MCQs. Which MCQs? So RTP, recent RTP had five, there's a case scenario based MCQ, a complete case study. So there are MCQs from there. Then there are individual MCQs, that's called general MCQs. Then from the MTP one, so that around 26 in that part, and then we have case study based MCQ of different chapters from study material, that is 90. I think these are the most important MCQs. They are the most important MCQs which a CA student is supposed to do, because these MCQs, okay guys, these MCQs are straight away from the latest RTP, MTP and study material. So if any student wants to prepare MCQ, these are the first thing, these are stepping stone, and on this basis, you can feel, you can practice, and you can get comfortable with solving of MCQ, guys. Okay. Now, so let's start with it. Just a minute, guys. Just a minute. If you want, you can get these MCQ file from the description. Okay, it is on Audit Guru Telegram channel. Now, so let's see, guys. Let's start one by one. So now what I will say is, you should focus more and more on the question. Question is very important. Spend a lot of time on understanding the question, and then understanding the options rather than studying the whole case. That's very important. Okay, so let's see what I'm going to do. What I'm going to do is, I am going to directly go to the question. Yes, guys, out of 10, almost 8 cases you will be able to solve on the basis of question MCQ alone. That's the very important thing. And then you can go to the case as required. So there's an audit team of BCD and company. They're not sure which materiality to choose. To evaluate the effect of identified misstatements. So there's a confusion over materiality on the audit and of uncorrected misstatement, if any, of the financials, in order to form opinion and to conclude as to whether the auditor has obtained reasonable assurance. So the question is, which materiality to choose as a whole. Okay, you are required to guide audit team by selecting appropriate option from below. So the question is, which materiality to use. Okay, let's see, guys. Now let's read the option, then we'll go to case study as and when required. In case of special purpose financial, okay, they are special purpose financial statements. So if you see, all of them, they're talking about special purpose financial statements. Special purpose financial statements. Special purpose financial statements. Special purpose, this comparing the options is a very important thing. Okay, let's see. In case of special purpose financial, management may agree with the intended users on a threshold below which misstatement identified during the audit will not be corrected or otherwise be adjusted. Okay, so what they're saying that in special, you all must be aware that there are two types of framework: general purpose and special purpose. Special purpose for specific users, and in that, management may say that, okay, listen, all the misstatements below 50,000 rupees, they are very small for us. So let's agree, let's make it as a threshold, okay, that such small misstatement need not be corrected, otherwise be adjusted. So management has given us a threshold. The existence of such threshold does not relieve auditor from requirement to determine materiality in accordance with 320 for the purpose of planning and performing the audit of special purpose financial statement. So first option says that even if there is a threshold, Yeah, we understand there's a threshold. Still, we are supposed to follow SA 320, analyze the situation and determine the maturity level. Determine the maturity level and maturity of the items, irrespective of, even if you give us a threshold limit. Okay. So the question is now, whenever threshold is decided, whether that by default becomes the maturity level or that just become a guiding factor, and auditor will have to have his own maturity level. That's a very beautiful concept. Okay. So as per SA 800, guys, as per SA 800, as per SA 800, yes, they can prescribe a threshold limit. That's absolutely fine. Okay, that may be used throughout the assignment, but we have to determine our own maturity level. All the standards on auditing apply to 800 series assignments also, but definitely those standards may need to be applied properly. That means you may adjust some of the conditions. So here the answer is, even if there's a threshold limit, auditor will compute its own maturity level. Definitely threshold limit will be considered. It will be useful in understanding the users, in understanding the management. So guys, the answer here is A. Okay, because in B option they are saying threshold is sufficient, no need to compute maturity level. That is not correct. Then it says auditor need to follow threshold limit provided in terms of contract. Okay, that's not correct. So both of them, they go wrong there. And then it says that SA 320 is not applicable. So even that is not appropriate. So perfect answer is, guys, A. Beautiful concept, lovely concept. MCQ, guys, I will say one thing. Don't take these MCQs as a testing. Take it as a learning activity. Guys, take it as a learning activity. You will enjoy the knowledge. Few more things will go in mind, because institute is going to hit concepts you never thought about. Okay. Don't worry. Not all the MCQs in the paper are going to be like that. Okay. But definitely some of them will be like that. Just like best of the cricketers, they leave bouncers. They know which balls to leave. You should also know that some questions will be weird. So don't worry about it. But then we have discussed this concept in our class. Now, next is Mr. Money. See, I didn't read the complete case also. I focused on the MCQ questions options. Mr. Manish, the audit manager of BCD and company, objected to insertion of other matter paragraph in audit report. According to him, there is no such requirement to send OMP to disclose the use of special purpose, whether contention of Mr. Manish is in order or not. Again, as per SA 800. Okay. Whenever a special purpose framework is there, management is supposed to disclose about special purpose framework in the notes to accounts. Okay. And as an auditor, we are supposed to highlight it, draw attention to it by putting EMP, emphasize of matter paragraph. We are supposed to put EMP, emphasize of matter paragraph. So there they are saying they are putting OMP, that is not appropriate. So first option says, if you want to highlight the use of special purpose, put OMP. That's not correct. Next says that you should put this in management responsibility. That's not correct. You should put in key audit matter. That's not correct. If you want to highlight something which is given in the financial statement that the client is using special purpose framework, you are supposed to highlight it by putting EMP, emphasize of matter paragraph. So that is the correct answer, guys. Emphasize of matter paragraph. Now, Mr. Chitrang, the audit manager at BB and Associate Chartered Accountant, is seeking your guidance in drafting separate opinion on cash flow statement. Separate opinion on cash flow statement and other financial statement. Guide the audit manager by selecting appropriate opinion from below. Okay. Drafting separate opinions on cash flow statement and other financial statements. So guide the audit manager by selecting appropriate when the auditor considers necessary to express adverse or disclaimer and opinion on the financial statement as a whole, the auditor shall not include unmodified opinion with respect to same financial reporting framework on single financial statement or one or more specific elements, accounts or items of the financial statement. Okay. Now, what they're saying is that auditor is performing multiple assignments. He is performing audit of complete set of financial statements, and he is performing audit of single financial statement also, like separate audit of cash flow statement or P&L or balance sheet or other comprehensive income. Okay, so now, so a separate opinion is, so they are saying there's a complete set of opinion and there's a separate opinion. Yeah, audit can be of complete set of financial statement and audit can be of single financial statement and element of financial statements. So they are talking about a separate opinion that is separate from the complete statement. Yes, definitely. You can give opinion on complete set of financial statement and you can give opinion on separate your single financial statement. Definitely that is possible. You need to, definitely that is possible. You need to make separate reports on complete set and single set of financial statements. Now the question is, now they're asking that if you're giving adverse or disclaimer on the whole financial statement, can you go and say that, okay, everything is as such materially misstated, we are not having sufficient appropriate evidence about everything, but okay, but single financial statements give true and fair. Can such thing happen? So standard clearly says that if you are giving adverse or disclaimer, if you are giving adverse or disclaimer on complete set of financial statement, okay, if you are saying that car is absolutely bad, it's a third class useless car, you cannot go and say that, oh, but design is lovely, oh, but the engine is lovely, oh, but then the interior is lovely. How can you say that? It will be contradictory. So when you are giving adverse or disclaimer on complete set, you cannot give an unmodified separate opinion on single financial statement or any of its elements or any of its elements. You cannot give unmodified opinion. There is an exception to it. When we study SA 805, we study the exception. Okay, if three conditions are satisfied, that yes, you can give a separate opinion which is unmodified on, not on the single financial statement, but specific element or account, it can be done. But there are conditions. It should not be prohibited by law. It should not be published together. And the small item which we are talking about, it should not form major part of the financial statement. We study this in 805. So beautiful concept, lovely concept. Okay. Here, A option, they say that, so whenever you give adverse or disclaimer, you cannot give, in general, you cannot give unmodified opinion on single financial statement or specific elements or account items. Okay, that looks appropriate. The expression of disclaimer of opinion regarding in case the auditor express in the expression disclaimer regarding result of operation and cash flows were relevant and unmodified opinion regarding financial is allowed. It's not like that. It's not allowed. If you have given disclaimer, you cannot give unmodified opinion on single financial statement. Giving unmodified opinion on financial statement prepared the same. What SA says is pretty simple. If you have given adverse or disclaimer on the whole, you cannot go and talk about unmodified on single. Okay. So all other statements are twisted, they are useless, they have not much use. The option number A is perfect. It expresses exactly what SA 805 says. Exactly what SA 805 says. Now, next is the company has violated The company has violated provisions of Companies Act 2013 by not appointing an internal auditor. Which of the following statement likely they have not appointed internal auditor? Which of the statement likely to be correct reason necessitating the appointment of internal auditor, and for the matter relating to appointment of internal auditor for the financial year 22-23? Again, beautifully they have drafted in described situation. So they are saying that they have not appointed internal auditor. Okay. Now, which of the following is the reason that internal audit was applicable to the entity? So section 138 is applicable. Section 138 is applicable, and it talks about applicability, applicable to all the listed entities, and for unlisted entities there is a limit of 25 crores, 50 crores, 100 crores, 200 crores. Deposit limit 25 crores and more, share capital 50 crores or more, you are borrowing 100 crores or more, and turnover 200 crores or more for public company. For private company it is 100 and 200. 100 and 200, same when we talk about borrowing and turnover. Okay. So, and with the most important thing, if you're talking about applicable of 2022-23, you don't have to see data of 22-23, you have to previous year. Why so? So that start of the year we are aware whether internal audit is applicable or not. Internal audit is something which happens throughout the year generally, throughout the year. So we should know it beforehand whether it's applicable. And if you want to know that, you will have to see previous year figures. That's extremely important. That's extremely important. So we'll have to go to the case now. We have to see applicability of financial 22-23. We don't have to see 22-23 data. We have to see 21-22 data. Turnover limit. Paid up capital limit is 50 crores. Paid up capital limit is 50 crores. Borrowing limit is 100 crore. Turnover limit is 200 crores. So, paid up capital limit is not broken. Borrowing limit is not broken. What is broken is the turnover limit. Turnover limit. So, because of turnover limit, things will get applicable. Things will get applicable. So these are private limited entities. So if you see option A, they say that they talk about turnover. They talk about turnover, that it is getting applicable because of turnover of 21-22. Such an internal auditor may either be individual or partnership firm only. If you have read 138 properly, we know that internal auditor can be individual, can be partnership firm, or can be body corporate. So A is partially correct. Then B, they are talking about that it's getting applicable because of turnover and borrowings, and because of turnover, because of borrowings, and because of paid up share capital. So that is wrong. Then C, you are saying that it's fulfilled necessary condition to turnover. Of course, turnover, and it covers everything, individual, partnership. So C is better than A. C is better than A. It has one more important ingredient. See, option MCQ is selecting the best option, guys. So you have to study the options carefully and all the options. If you see, technically A is also correct, but C is better than A. C is better than A. Okay. Now, Mr. Anand, an audit executive, has performed various procedures in the course of audit. Which of the following combination of procedure are not likely to be considered risk? Which is to be not likely to be risk assessment procedure? Listen, guys, risk assessment procedure means collecting information, obtaining understanding. So that on that basis we find out what are the complicated areas, where there are a lot of fluctuations. where are complications, where are judgments, pressures, fluctuations, so that we can find out the risk. So whenever you are collecting information, that's called risk assessment procedure. Then, so performing trend analysis, going through company's internal control manual and visiting the company plant. Definitely, if you remember SA 315, analytical procedures, they talk about 3 ways of obtaining information. No need to ratify, cram. By common sense, you'll be able to crack it. But if you know the meaning, the proper meaning of what you mean by risk assessment procedure, collecting information, obtain understanding, so that on that basis we can find out the risk. So if you're collecting analytical procedure is one of the way. Most simplest, easiest way of getting information is inquiry. Then analytical procedures, and then inspection and observation. Okay. So A looks fine to me. It talks about analytical procedures. It talks about inspection of manuals and observation of the plant. We are supposed to find not likely. So this is not likely. So this is a risk assessment procedure. Inquiries from company marketing personnel. This is again a risk assessment procedure. We are supposed to not communication with company's external legal counsel by sending letter of inquiry. So if you recall SS 501, in 501 there is one area, litigation and claims, and in that there is step number 1, first you collect information and see whether there is a risk. If there is a risk, you apply step number 2. If there is a risk, we increase audit procedures, we go for direct communication with the external legal counsel, we go for a letter of inquiry. So this is a response to risk. This is response to risk. This is not risk assessment procedure. This is response to risk. So some of you must think, oh my God, they are checking knowledge of 315 also. They are checking knowledge of, listen guys, it may appear initially a very dangerous MCQ, but if you study and analyze, if you apply some common sense, okay, you will be able to crack it. And guys, if MCQs are very easy, it's going to be cakewalk. So they are going to put some complications. Inquiries made in the company's information system. Again, inquiries, that is simply collecting information. So listen guys, A, B and D are definitely collecting information. That's a risk assessment procedure. But if you letter of inquiry should strike into your mind, it is a point of SA 501, then you should know that if there is a risk, you increase your audit procedure. Now, let's see guys. So lovely, beautiful MCQs, loved it. Okay. Now next is Safe Health Insurance Limited is company working in the field of health insurance sector. Health insurance sector, it is now using a claim management system. Claim management system where incoming claims can be immediately identified on website itself. A form is issued to the customer who signs it. The details are verified by the system against the data present in it. Such system has allowed faster processing of the claims, error-free data validation, and increased customer satisfaction. In respect of situation regarding working of insurance company, which of the following techniques are likely to be used? So what's happening, so customers are supposed to put, whenever loss happens, all the details on an online form, and they have a system which does all the repetitive nature tasks. They do all the repetitive nature tasks, well-defined tasks. So if the form comes, check the policy number, check the premium. System is only doing it. It is validating everything, whether the policy number is appropriate, whether the tenure, whether it is covered in the policy, whether the reason is appropriate, whether it is within the sum assured, whether the signature is appropriate, whether all the details are there, asking for more details, and so on. So what is this technology all about? Is this called Internet of Things? Internet of Things is on IoT. IoT technology is in air conditions, mixers, coffee makers, fridge. So it's in appliances. So it's not that. Data analytics means using loads of data and try to derive and extract patterns from them. It's not that. Power BI is about presentation of data. It is Power BI helps in performing data analytics. Power BI is a software for that. It is called RPA, robotic process automation. So things which humans generally used to do, they are mimicking humans and doing those activities. So the repetitive nature activities where there's defined streamlined steps. So those things are done. Those things are done by the machines and softwares. That's called robotic process automation. Okay. Now, so that's interesting. Next is Bansal Arora and Company is currently performing audit of Wool Limited, size of manufacturing. Mr. Bhavesh Bansal, experienced audit engagement partner, holds the responsibility of ensuring that the audit engagement aligns with the professional standards. Professional standards, regulatory requirement for blah blah blah. While conducting the audit, the engagement team encountered complex issue pertaining to valuation of company's inventory. Within the team, there's a difference of opinion. Oh, there's a difference of opinion. How to address this matter? Contentious, complex matter, difficult matter. Contentious, complex matter, difficult matter. So we have SQC1. If there's a difference of opinion, go and see what are the firm's policies for resolving difference of opinion. Okay, there can be a lot of policies. Maybe people need to put everything in writing and share with each other, or discuss with the senior, discuss with the manager or partner, or partners may need to vote. What are the firm's policies need to be followed? Okay, firm's policies need to be followed. Other to firm's policy for addressing resolving difference of opinion, that looks good. Mr. B. Bhavesh should secure management's representation. Management representation. There is a difference of opinion between the fee. Why are you going for management representation? Ensure appropriate consultation occurs with the engagement team and if necessary with individuals at appropriate level within or outside the firm. The difference of opinion how to. Okay, now listen guys. So I also I was I was about to say that how students can do mistake, and I also took the same path. Very intently drafted MCQ. You may read the word difference of opinion. Within the team, there is a difference of opinion on how to address the matter, resulting in contentious situation. Okay. Now here, there is no difference of opinion on a particular issue. That means if someone is saying that let's put unmodified and someone says qualified, there's a difference of opinion on the issue, on the matter. Okay. So difference of opinion means within the team or with the consultants, there's a difference with the EQCR reviewer, engagement quality control reviewer. There's a difference of opinion. What should be the treatment of a particular matter? That's a real difference of opinion. Here, the situation is not like they may use the word difference of opinion. But the point is how to deal with contentious situations. Contentious means very complex, complicated matters. Contentious means complicated matters. So appropriate consultation should occur with the engagement team and necessary. So if there is a contentious matter, there should be consultant. Communicate it to client's management. That's not the solution. Okay. So now they may use the word difference of opinion, but there is no real difference of opinion on a particular matter. Now here they are discussing what should be done in this particular situation, how to proceed in this particular situation. So guys, be very careful. You may feel that it is a real difference of opinion on a particular matter, that where it should be an unmodified opinion or a qualified opinion or a disclaimer, but with the difference of opinion is not the real point of this MCQ. What to do in this situation? What to do in this contentious situation? So option C. Option C is the real answer. Okay, very beautifully drafted. They are purposefully using the word difference of opinion, But the point is, how are you going to deal with the contentious situation? So let's freeze, guys. If they really give you a particular matter, whether to qualify or not, whether to give adverse or not, whether to give disclaimer or not, that is a real difference of opinion. That is a real difference of opinion. Whether inventory is overvalued or not. Okay. Now, when they talk about what should be the point of action, what should be the point of action, what audit procedure need to be done, that is not the real difference of opinion. They are just using the words. Very high probability, very high probability. So let's freeze. If there's a real difference of whether the items are misstated or not, what should be in the audit report, that's a real difference of opinion. And when there's a confusion, what kind of audit procedure should be applied, then you will focus on what audit procedure need to be applied. Okay, so here we need to focus on what audit procedure need to be applied. So if there's a if there's an interpretation issue, treatment issue, that is real difference of opinion. That is real difference of opinion. Okay. Otherwise, they are asking what should be audit procedure. They are asking what should be audit procedure. So your answer should be C. Beautifully drafted MCQ. So guys, you need to keep your cool and study the options properly more and more. Now here, the financial statement of the German company. Financial statement of German company, for the financial statement of German company for consolidated audit of CFS, what could be possible situation? What could be possible situation? Okay, let's see. So reading the last two lines, we may not get exactly what they want to ask. Alexa Private Limited has been operating in India for past 15 years with 3 group of companies. Operating in India for past 15 years. Past 15 years with 3 group companies, 1 subsidiary in India, 2 in Singapore and Germany. The acquisition of the subsidiary are gradual with control. The statutory auditor have determined all group companies significant. All of them are significant. Significant for the audit of consolidated financial statement. For the audited financial statement of all components are available. Of all components are available except for the German company. Oh my God, German company, which is a substantial contributor. Okay, audited financial statement not available. If of a big component, we have studied this. So this is completely on the group financial statement, consolidated financial statements. That if audited financial statement, audit report is not available for the substantial portion, you may have to qualify. We'll have to qualify or disclaimer as the case may be. Okay, we have to modify the report. So we have to modify the report. That's the issue. Because it's in progress. First say because it's in progress, subject to audit be considered by a parent company, audit and signed file can be provided to the auditor even after the release as this matter of documentation. So they are saying audit and signed financial statement can be provided to auditor even after the release of audited consolidated. So they are saying that it's absolutely fine. First complete the audit of consolidated financial statement, then audited financial statement of the component will be provided. Oh, that's nonsense. Before you complete audit of consolidated financial statement, you need all the evidences. You need that audit report of the subsidiary before audit report on CFS is finalized. So that is absolutely wrong. If audit does not receive audited financial statement, we should modify the report. That looks absolutely fine. putting other matter paragraph. When do we go for other matter paragraph? If it would have been a very small portion, if that substitute have been a very small, very small contributor, would have put OMP, other matter paragraph, because it's a substantial contributor. OMP is not going to justify. Simply exclude the financial statement. Okay, even that is useless. So the answer is B, guys. B is the perfect answer, proper answer. So it was lovely, guys. Lovely. RTP, some questions were really good, very interesting. Let's go ahead, guys. So I think these are lovely questions and it's going to take some time, guys. It's okay. We are going to spend time. Don't worry. But then doing these MCQs is important. Now, in the above given case, what should be the next course of action on part of auditors of ABC Limited when the auditors conclude that the reason for management refusal to allow to send the confirmation to debtor is unreasonable and the auditor is unable to obtain relevant and reliable audit evidence from alternative audit procedure. So situation is pretty simple, guys, that auditor wants to send the external confirmation, but there's a management refusal. So SA 505 is applicable. Management is refusing. You cannot send external confirmation procedure, and by applying alternative audit procedures, he tried to apply alternative audit procedure, but alternative audit procedure is not giving relevant and reliable audit evidence, sufficient appropriate audit evidence. So there's a lack of sufficient appropriate evidence. It's very simple. We have to modify the opinion. We'll have to modify the opinion. As simple as that. Okay. So in option A, they are saying that if there is a refusal, you go for key audit matter. Why to go for key audit matter? We have to modify. Okay. A reason of refusal should be included in written representation. Even that is useless. We'll have to modify. They are saying put emphasis of matter paragraph. Even that is useless. We have to modify opinion. So answer is C. We have to modify opinion. So answer is C, guys. Whether PQR and company should adhere to opinion. Whether PQR and company should adhere to opinion formulated by PK and company and XYZ and company, or explore alternative option. PQR and company, so I think there are joint auditors. So PK and company and X and YZ and company. So there are three joint auditors that appears. There are three joint auditors. One auditor is having a different opinion. Two are having different opinion. So whether a majority rule need to be followed, SA 299 is applicable. We don't have to put majority rule. We'll make separate. PQ and company will make a separate report, and PK and company, XYZ and company make a separate report. Okay. So PQ and company has discretion to issue distinct audit report independently. Okay. So going for majority is incorrect. They are saying that put both the opinions together is incorrect. Again, majority is incorrect. Separate report is the correct answer. Separate report, guys, is the correct answer. Just a minute, guys. Now, in above given case, what should be the course of action on part of ZMR and company when they found the material misstatement which has not been accurately accounted or presented or disclosed in financial statement of the current year? If there is a material misstatement, should not pay attention. That is absolutely crap. Qualify adverse is fine. Take a written representation is absolutely crap. If there is a material misstatement, emphasis of matter paragraph, absolutely crap. So you have to go for qualified or adverse. A very pretty simple, straightforward. See guys, again, I understand in exam you will go and read the main case study. That's fine. But then I'm saying don't spend a lot of time on that. Spend 90% time on reading the MCQ question and options. Okay, this technique is going to save a lot of time and it is going to improve your accuracy. Okay. Now, with respect to fees to be charged for its new assignments, which option can be opted by MN and Associates? To charge fees as a percentage of net profits or to charge fees 501? Okay, so here professional ethics is applicable. We know that under clause 10. Okay, under clause 10 we cannot. Second schedule part 1 clause 10, not clause 10, sorry. Okay, now first schedule clause 10, it is first schedule. Okay, first schedule part 1 clause 10. So now what we should do, should we charge on percentage basis for its new assignments? So we need to see upon hearing about efficient service provided by Avenue Associates, they were approached by XYZ Cooperative Society to act as statutory auditor for upcoming financial year. The firm agreed to offer and had the following options in mind with respect to fees to be charged from them. Okay, fees to be charged from them: to charge fees as a percentage, of net profit, or to charge fees of 501. So guys, it's a cooperative society. It's a cooperative. So the twist is that it is a cooperative society. That's very interesting. That is a cooperative society. So can we charge on percentage basis, or we can charge fixed, or we can do both? That's very interesting. So there is regulation 192, which clearly says that when it comes to cooperative society, you can definitely charge on percentage basis. So guys, this is very important. You can definitely charge on percentage basis. So can you go on percentage? Yes. Can you go for fixed? Yes. So whether only one, only two, answer is either you can go for one, or you can go for two, one or two. So the perfect answer is C, guys. Perfect answer is C. So again, very interesting. They played the game in cooperative society. If it would have been any other audit, percentage basis was not allowed. Percentage basis in that case was not allowed. Okay. Now, MN Associates sought direct assistance from CA, from a chartered accountant, internal auditor, as stated in the above, advise as to whether he is permitted to do so in accordance with relevant standard on auditing. Direct assistance from a chartered accountant, CA internal auditor. So can a direct assistance be taken? Cannot assist in assembling information to resolving exception confirmation responses. Now, so for what they want to take help? See, so you have to skim through, you don't have to read everything in detail. So I am looking for the word direct assistance. He also seeks his direct assistance assembling the information necessary to resolve the exceptions in confirmation responses with respect to external confirmation request and evaluation of the result of external confirmation procedure. So it's pretty simple, guys. It is pretty simple. What they're saying is that External confirmations were sent, replies are received. Now, after receiving the reply, we are comparing. There are differences, there are exceptions. There are differences, there are exceptions, guys. Okay. Now, we have to probe the exceptions. So we want to take help of internal auditor that you probe the exceptions. It is absolutely fine. Absolutely fine. It is allowed. See, internal auditor cannot control and perform the whole external confirmation process. That's not allowed. But to do a small part of it as per instructions of the statutory auditor is absolutely fine. He cannot control the external confirmation process. He can do a very small part of it. He can do very small part of it. So cannot assist is not a good answer. Okay. Let's see, guys. Cannot assist in assembling the information, resolve the exception. B, associate cannot ask for diagnostic regarding evaluating significant accounting estimates. Okay, they want to take help of more things also apart from that. Okay, they are saying that cannot ask for assistance. Definitely, significant accounting estimate is something which statutory auditor should do himself. And assessing risk of material misstatement. Correct. But however, may assist MN company associate in assembling information. So that is absolutely fine. They cannot help in area where there are high risk of material misstatement, significant risk, or areas where a lot of judgment is required, like estimates. They cannot do that, but they can definitely assist in exception solving. So answer should be B. Let's see. Direct assistance. They are saying cannot. They are saying cannot in both the cases. So they have put one more case in option that direct assist. See, so it's very simple. Direct assistance is not possible in high risk areas or areas where very again high level of judgment, substantial judgment is required. In both this, internal audit help cannot be taken. But then about the exceptions, yes. So they are saying cannot in both, and here they are saying can in both. So both of them are incorrect. Perfect answer is B. In significant, they cannot. In simply resolving the differences, they can. As per which clause CAN is liable for misconduct? So we have to go and read. Posted his framed photograph on his website, passport style photographs, no other photographs. No other photographs can be, only passport style photograph should be there. Okay. So this photograph is not as per website guidelines. And you can say historically or in past, all the questions of the website guidelines have been covered under clause 6, because in old modules, website guidelines used to be given immediately after clause 6. So whenever there's a website thing, you have to invoke clause 6. You have to invoke clause 6. So here clause 9, clause 6 will be applicable. Clause 6 will be applicable, guys. Okay. So that's how professional ethics work. It doesn't work on interpretation of the words. It works on a pattern. There is a pattern everywhere, and you need to follow that pattern if you want to give correct answers. Before signing tax audit report, Mr. sent a registered post to previous auditor and obtained postal acknowledgement. Will Mr. M will be held guilty of professional misconduct before signing tax audit report? Before accepting the assignment, okay, you have to send the communication to the previous auditor, not before signing audit report. He is guilty. Whether he will attract closet, yes, all of them talk about closet. Okay, here they are saying not guilty, then will be guilty. Okay, then see then they're saying that then they're saying will not be guilty. will be guilty, will be held guilty. But then here they are saying second schedule. So compare first schedule. Comparing the option is the most important thing. Comparing the options is the most. Second schedule is as such wrong. Not guilty is as such wrong. Okay. Then not guilty is as such wrong. Perfect answer is B. Perfect answer is B, guys. Okay. So he will be guilty. He will be guilty. Now, let's see. What was the responsibility? We're going to case number 3. What was responsibility of Mr. Rahul when the management refused to remove the said limitation? What was the responsibility of Mr. Rahul when the management refused to remove the said limitation? So we have not read the case, but we have not read the case. But then, from reading the question, we understand some limitation was put, and management is refusing to remove the limitation. When management does that, we do two things. We go to TCWG and we start performing alternative audit procedures. So we do two things at the same time. So option A says that go for alternative procedures. Okay, fine. Option B says that go to TCWG and alternative procedure. That's perfectly fine. Perform additional procedures. When one thing is not possible and we go for another, that's called alternative. When we do one thing and then we go for one more, that's called additional. Okay, so that is okay. So that way it is wrong. Common sense, guys. Don't need. That doesn't mean you need to mug up. It doesn't mean you need to mug up the language. That doesn't mean, oh my God, I want to remember where is the word alternative, where is the word additional. It's not like that. It's common sense, guys. Okay, we are not able to do something, and apart from that, you do go for something else. That's called alternative. You do something plus you do something more, it's additional. So here the proper is alternative. And written representation. No. So you go for two things. So answer is B. Answer is B, guys, in this case. Okay. Now, what was responsibility of RKM and company with respect to issue of limited review report at time of resignation? So they are talking about limited review report. Okay. At the time of resignation. Okay. What was responsibility of RKM and company with respect to issue of limited review report? Limited review report at the time of resignation. Okay, so this is very interesting. So there is a SEBI circular on this. There's SEBI circular on this, that if after quarter end, if you resign within 45 days, you have to do review of the previous quarter for sure. And if you resign after 45 days, you have to do, even if you resign, you have to give report of the previous quarter and the quarter in which you revised, that also. So very beautiful. And third point, if you have done review of 3 quarters, you have to do review of 4th quarter and sign the annual financial statements also. So here what's happening, November 15th, 2023. So the first quarter is April, May, June. Quarter 1, April, April to June, review is done. Quarter 2, July, August, September. Okay. July, August, September. Quarter 3 is October, November, December. So person is resigning on 15th of November. 15th of November. So whether person is resigning within 45 days, is it resigning between 15th of November? What is the time gap? 30th September, October, November, on 15th of November, exactly now on 15th of November. Okay. So, but we have to count 45 days. Okay. So September, so October, it is 31 days. October. Okay, let's see the difference. October, 31 days. And November, 15 days. So if it is within 45 days, here it is total is 46. 46 guys. So beautiful, again beautiful drafted case. Loving it. If it is within 45 days, within 45 days, within, okay, within 45 days, it would have been, if it would have been, okay, only, it would have been only previous quarter review you are supposed to do. Okay, let's see guys, just a minute. So if you see the actual wording, if it is within 45 days, one thing, if it is after 45 days, the other thing. Okay. So here, when we are counting, okay, whenever we count days, guys, okay, we have to count after the end of quarter how many days have happened. So 31 days of October, on 46th day, resignation is happening on 46th day. It is after 45 days. So point is, auditor will have to do the audit. Of quarter 2 also, and because it is happening on 46th day, quarter 3 also. And now because he has done the audit of all the three quarters, he will have to do review of 4th quarter also and the audit of whole year also. So they have covered exactly, precisely a very interesting case which comes up. So here only 3rd quarter, now only third quarter will not be a correct answer. No further review will not be a correct answer. 3rd quarter, yes. Audit report of the full, yes. Subject to terms and condition, nothing can override what loss is, can override SEBI directives. So perfect answer is C. He will have to do it for third quarter also. He will do it for fourth quarter also. Is for the whole year also. Okay. So good case. So they have covered a very specific case, and that 46th is a very interesting thing. 46th is a very, very interesting thing. Now let's see, guys. Whether in the given circumstance withdrawal from the engagement was mandatory, and if so, what is responsibility of the auditor with respect to such withdrawal? Whether in the given withdrawal from the engagement was mandatory, and if so, what is the responsibility of auditor? Okay, whether withdrawal was mandatory, they are saying whether withdrawal was mandatory. So here they are saying that already two limited review reports. Okay, that's fine. We were aware about that. The management of imposed limitation of scope. Limitation on scope likely to result in need of qualified opinion or disclaimer on financial statement. And accordingly, he requested man to remove such limitation, but management refused to remove the limitation. So he went to the management. Management didn't listen. So he was supposed to next he was supposed to perform alternative procedure and go to TCWG. Alternative procedure and go to TCWG. Whether withdrawal was mandatory, whether it was mandatory, the question is. In the given circumstance, withdrawal from engagement was not mandatory. In case of withdrawal, the auditor is required to withdraw from the audit with withdrawal from the engagement was mandatory, not mandatory, was mandatory. And in case of withdrawal, the withdrawal from the audit procedure before issuing the audit report was not practical or possible. He was required to disclaim an opinion on financial statements. In the given circumstances, withdrawal from the engagement was mandatory, in case of withdrawal, the auditor is required to withdraw from the audit where practical or possible. Not mandatory, and in case of withdrawal, as withdrawal from the audit before issuing audit report was not practical, he is required to disclaim an opinion. So what seemed to be the correct answer? Whether the withdrawal is mandatory or not. Now, just a minute, guys. See, SS 705 is applicable. Here, SS 705 is applicable, and that is limitation of scope. Limitation of scope. So, first you go to if there's a limitation of scope, first you go to management. If management doesn't listen, you go to TCWG and perform alternative procedures. Even that is not giving you evidence, then you see whether it's a pervasive effect or not. If it's not pervasive effect, so we have to see whether it is having pervasive effect or not. So saying likely to express qualified or disclaimer of opinion. It is material and pervasive. It is material and pervasive. Material and pervasive effect. If it's a pervasive effect, the auditor shall withdraw from the audit. Shall withdraw from the audit where practical and possible. So, see the whole question is there's a limitation of scope. You go to the management, they're not listening. Okay, then you go to TCWG, an alternative, that's not possible. There's again lack of evidence. They're saying that there's a lack of evidence and the effect is big effect. Then we should think about withdrawal if it's practical. So generally it is practical at the early stages. Generally it is practicable at the early stages. Practical and possible under the law. And if it's not possible, then you go for disclaimer. Okay. So first you should think about withdrawing. First you should think about withdrawing. And they are using the word shall. The auditor shall. You should think about withdrawal. Okay. So guys, we have to think here about withdrawal. And if withdrawal is not possible, in given circumstances, first of all, we have reached to the last stage. Okay. Not mandatory should be removed. Mandatory. If it is not practicable, go for disclaimer. So this is the perfect answer. First, we should think about withdrawal. If it is not practicable, then you go for disclaimer. Okay, that's a perfect answer. Guys. Again, okay, so they have dragged you deep into it. But that's how they are going to do it, guys. And whenever they ask such MCQs, there's a high probability that these will be repeated. Again, guys, take it as a learning activity. And if you come across a very tricky MCQ, there's a high probability that it gets repeated. Okay. See, they have to pass more than 10,000 chartered accountant every attempt. They cannot make whole paper extremely tricky. That's not. To be very honest, irrespective of how is the paper, irrespective of how is the checking, more than 10,000 students are going to become chartered accountants. You just have to be in top 20%. Don't worry about the paper. Don't worry about the checking. Simply ensure that you are in the top 10-20%. If you are in top 10-20%, you are going to become chartered accountant. Then whether it will be with the help of a good paper or whether it will be help of good checking or it will be the help of the additional marks. Okay. So that's interesting, guys. 705 is applicable. Now, assuming Sun Chemical Limited to be unlisted company, whether reason for resignation was proper. It's an unlisted company. Whether reason for resignation was proper. The auditor should have clearly mentioned the reason for resignation in resignation letter issued to the company. Just a minute. What they're talking. In resignation letter, the firm mentioned professional preoccupation. Professional preoccupation as the reason. Now, SEBI said in its circular that I am very busy right now, so I am resigning. What nonsense. Before accepting assignment, you think everything, whether you have team, everything, every damn thing available for doing the audit, and then only you accept it. And you cannot say that, oh, I am not having time, I am not having team. That's highly unprofessional, unacceptable, useless reason given. Is this reason given proper? It is absolutely useless. It is absolutely useless given. So, yes, whether the reason for the resignation was proper. No, it's not proper. No, they're saying yes. Wherever they're saying yes, it's going to go wrong. No, the reason should have been little lengthier, and further the exact reason must be provided to the new auditor. No, you have to. Companies Act, SEBI. Whenever you resign, you have to give reasons to company, to ROC. If it's a government company, to CNAG, and not the new auditor. So, correct answer is A. Real reason that there was a dispute, they were not listening to you, there was a material misstatement, there was a pressure, whatever it is should have been there. Then, assuming that auditor proposed to resign, on 14th of November, assuming if they are changing the date, guys, okay, before issue of limited review for second quarter and the LR limited review for, so they are changing the case. Then what was the responsibility of RKM and company with respect to withdrawal from the engagement and issue of limited review report at the time of resignation? Okay. So see, in that case, in 14th of November, they're changing the date. So if it is 14th of November, the person is resigning within 45 days. If it is resigning within 45 days, he simply need to do audit of the previous quarter. Just finish up the previous quarter. Only second quarter need to be done. That's it. Communicate to TCW the matter regarding misstatement identified and would give rise to modification of opinion and the limit referred second and third quarter. Here they are saying second and third quarter. Then in B they are saying only for second quarter. Then saying limited review not required. No report should be given. The auditor shall communicate TCW the possible effects on the financial statement, if any, could be both material and pervasive. So the qualification of opinion would be inadequate. Qualification of the opinion would be inadequate to communicate the gravity and the limited review report of second quarter was required to be issued. Now, the point is, let's see the reasons. The person is planning to resign on 15th of November. End of the third quarter. Okay. Now listen. So, first of all, the person is resigning within 45 days. So, within 45 days of the third quarter, that means he's supposed to complete second quarter only. He doesn't need to give report on third quarter. So, one thing is for clear that he has to go for second quarter only. So, he has to go for second quarter only. Now, second quarter is covered in option B and D both. Okay. Now, the problem arose end of the third quarter. The auditor shall, what is the difference between B and D? The auditor shall communicate to TCWG what possible effect on financial on unrelated misstatement, if any, could be both material, so that qualification of the opinion would be inadequate to communicate the gravity of situation and the limited review for second quarter was to be issued. Regarding misstatement identified during the audit, that would rise to modification of the opinion and the limited review for this was to be issued. We need to, now this is going to need, we need to go to the details of the case. So, In option B, they're talking about misstatement. In option D, they're talking about possible effects on the financial statement of undetected misstatement. So guys, here answer should be D. D should be the correct answer. And I think there is something wrong with the ICAI answer. We'll have to recheck. You can wrong answer with ICAI. So I will comment in the comment section. Okay, ICAI is, I think they are saying about B, but answer should be D. This whole modification is happening not because of misstatement, it is because of limitation on scope. So we are supposed to talk about the possible effects. Okay, and not misstatement. So correct answer is D, not B. I will have to check in the MTP what they have done exactly. So I will comment in the comment box about it, guys. Now, okay, anyways, our the focus is on concept. We work on the concept and the similar questions may come in the exam also. So if disclaimer of opinion is given, even then the limited review has to be provided as per 45-day rule. Yes, you have to give report. Report can be disclaimer also. You have to give report. Giving report is important. Giving report is important. Okay. Now, let's see, guys. Rohita and company, chartered accountant, mainly giving report is mandatory. Giving report is mandatory. They are not said what you have to give in the report. What opinion needs to be given, that auditor has to explain, whatever opinion. Rohit and company, chartered accountant, mainly into statutory audit and tax audit, has received an order in writing from central government in respect of one of its clients to carry out the investigation. Rohit is contemplating getting the assistance of an expert with respect to certain matters. So investigation. So this is on chapter of investigation. Investigation, if they think that the expert is required, they should take consent of the client and go for it. Can Rohit and company take assistance in pursuing? Choose the correct answer. Choose the correct answer. Let's see. So answer yes, yes, no, no. They can take assistance. They can take assistance. Should consider the assistance is like engineers, lawyers necessary and foolproof examination. Here 620 is not we are not doing audit. We generally do audits, but this assignment is investigation. This assignment is investigation. So how can you apply 620? Beautiful. How can you apply 620? Applying 620 doesn't make sense. So you have to go with A. You have to go with A. Okay, guys, I hope it is clear. Now, during the audit of Good Bank Limited, let's see. What is the total amount of NPA? Okay. What is the total amount of NPA? They're asking. 79 agriculture loan guaranteed by Government of Delhi. State government guarantee is useless. State government guarantee is useless. Amounting 79 agriculture loan 26 lakhs were overdue for more than 2 years. Overdue for more than 2 years. Then Government of India, overdue for more than 2 years. Ideally, they should have been talking about number of seasons. Okay. Then 6 corporate loans guaranteed 3 each by Government of India and Government of Delhi, 29 lakhs for each company, were overdue for more than 3.5 months. 3.5 months. Okay. Let's see one by one. Now, overdue for more than 2 years. So they're not talking about the seasons. Uh, but 2 years is a pretty long time. And we know that short duration crop, we talk about 2 seasons. Long duration crop, we talk about 1 season. Okay. So because it's a long time, they should have given season, they are not giving it, but it's a long time. I'm assuming that, fine, let's take 26 as NPA. Let's take 26 as NPA. Okay. (26). Then Government of India guarantee. So we may take NPA 26. Then Government of India. So not NPA. Not NPA because it's a Government of India. And here, so we have to focus on NPA only. Here NPA, 3 of the accounts of 29 lakhs each. So 29 lakhs each, 60, 78. During the audit of Good Bank Limited, the auditor and the management had certain difference of opinion amounting to amount and the items which need to be disclosed under the head contingent liability. Contingent liabilities. Okay. Now, let's see, guys. But it should not be contingent liability. They're talking about NPA. Okay. Let's see. Let's, I generally don't keep calculator in front of me. So this is 87. So 113. This is the correct NPA. 113 is the correct answer, guys. So they are not given the proper information, perfect information. But then 2 years is a pretty long time. It's an NPA, central government. It's fine, guys. So this is how we are supposed to get the NPA. I hope it is clear in your mind. Now let's go ahead. So it's interesting, guys. Doing this MCQ definitely improves your knowledge levels, your accuracy levels. So take it as a learning. Now, Sam Limited appointed Mr. Ajit and company chartered accountant. Okay. Which of the following statement hold true? What is true? Appointed Mr. Ajit and company as statutory auditor. The statutory found internal auditor function reliable and effective. So internal audit is reliable and effective. The statutory auditor assigned the task of assessing the inventory levels of few branches. Assessing the inventory levels of few branches where statutory auditor believed that there might be some risk of material misstatement to one of the assigned the task of assessing inventory levels, believed that there might be some risk of material misstatement. One of the to some risk of material misstatement. So wherever there was risk of material misstatement, that work is given to internal auditor. That's not good. That's not good. You cannot give risky areas to internal auditor. You are supposed to do it yourself. Since the internal auditor had recently done such assessment as part of internal audit program, therefore I believe that they could rely on farmer's report. Besides this, because of paucity of time, Sajid also requested to help them in some paper work, including audit documentation. Help them in some paperwork, including audit documentation. Before the audit was concluded, Mr. got promoted and shifted to another city. During the audit discussion stage, the lead statutory auditor found that the documentation delegated to Mr. was not complete. So, internal auditor has gone to different city. Accordingly, statutory further checked the inventory work delegated to the internal auditor, how it was found to be satisfactory. Inventory work was satisfactory. In the view of above, okay, what is correct? The working of internal audit was reliable and satisfactory. Therefore, the allocation of was within the authority of statutory auditor. This was further confirmed by satisfactory work. So the starting itself is that. So everything is fine. The first one wants to say that allocation of work was within the authority. So it's saying everything is fine. We have to find out what is true. But there's something wrong here. Something wrong here is that the risky areas cannot be given to internal auditors. So this is not perfect, and this is not a perfect approach. This is not perfect approach. Not true. The documentation would be considered complete. The documentation would be considered complete as far as statutory auditor's responsibility is concerned, as the missing documentation was because of the oversight of the internal auditor. Documentation would be considered as far as statutory auditor's responsibility is concerned, as missing documentation would be considered complete. How it can be considered complete? It is incomplete. Statutory auditor will have to complete it. Has not conducted similar inventory checking activity recently, therefore, because of familiarity with audit, right in delegating. This is not right. Should not have delegated. As per risk assessment, as the risk assess was there, should not have been delegated. This is true. Delegation itself, the starting point itself was not proper. So answer is D. So SS 610 got applicable. So guys, they were lovely cases of RTP, MTP, RTP and MTP. Okay. So you have taken a lot of time in that. RTP, MTP case are like that. Okay. Let's go to the chapters. Let's go to the chapter, guys. Just a minute. So it's along with video, it's possible to do questions side by side. Now, it has been contended It has been contained by auditor that the audit was properly planned. He has further stated that it was practically not feasible for a firm of small size to prepare detailed audit plan. So they are saying that small size. So they are saying that basically they want to say that if it is a big size audit firm, if it is a big size audit firm, if it is a big size audit firm, they have to follow all the standards of auditing. If it is a small size audit firm, they are not supposed to follow. They are not supposed to follow all the standards on auditing. Okay, so that is not a proper thing. What they're saying. Audit was in fact planned as evidenced by auditor's submission. So let's simply go to that. So simply scheme through whenever they are talking about the plan, you don't have to read the complete case. So I'm just looking for the word plan. So it was required for him to produce so it's very important trick, guys, that you don't read. I'm looking for the word plan. The whole MCQ is on the plan. I'm looking for the word plan. So I see plan. I'm going to read that only now. It was required for him to produce. This is required because people unnecessarily go through each and every line when it is not required. Because of that, you lose focus on the concept and the main thing, and you focus on something which is not required at all. It was required for him to produce audit working papers to show the audit was carried out in accordance with standards on auditing. It was to produce audit working papers to show that the audit was carried out in accordance with standards on auditing. Details of the audit plan and risk assessment carried out to identify risk and in financial were called. It was also required to show how response to assessed risk was designed and implemented and communicated to TCWG. So NFRA is asking the information basically. NFRA is asking the information to produce the working papers and produce the working papers with respect to plan, to how the planning was done, how risk assessment was done, how the risk was assessed, what was the response to risk. Audit working papers sent by him through email include procedure on how some balances were verified. Verification of inventory. Through email it was sent. It has some procedures. Did not include details of audit plan. So whatever documentation is sent did not include of audit plan and the manner of identifying assessing risk of material misstatement on being asked to respond. It was reason that audit was properly planned. So basically they are saying that we have done the proper audit. That is important. No need to document what was the audit plan, how the risk assessment was performed. No need to do all that. We have directly documented the audit procedure. That's it. We are not documenting the plan. So this approach is definitely not correct. So first option says that audit was in fact planned as evidenced by auditor's submissions. So they're saying that only giving the audit procedure is sufficient. That's not the correct thing to say. Although auditor has no record of audit plan, it does not affect compliance of 220. There should have been documentation. Since the auditor has no record for audit plan, it shows the non-compliance 220. Audit was in fact planned and evidenced by auditor submissions. However, there is no exemption. There is an exemption. For small CA firms. Let me tell you, there is no exemption to small CA firms. All the firms have to follow standards auditing properly. Exemptions are generally there if you are doing small audit of small entities. and that too there are no exemptions. There are no exemptions. There's specific guidance. There's no exemption. There's specific guidance. Not sometimes not even the small firms for the PSU. In some standards on auditing, there's a guidance how to handle audit of PSUs. There is no exemption whatsoever for the small clients, small assignments, or small firm. There is a guidance on how to deal with PSU audits. Okay, so the no record. Now this is debatable whether asset 220 or 230. 220 or 230. See, documentation should be done. This is emphasized in 230. This is emphasized in asset 300 also. And as a part of quality control system, when you perform the engagement, you are supposed to have documents that is given 220 also. So this requirement is emphasized in different standards. So even 220 will be fine, 230 will be fine, and 300 will be also fine. All the three emphasize on it. So okay, 220, fine. Now, next thing is the auditor has reasoned that risk of material misstatement has been assessed to be low based on his understanding of the company, and it is matter of professional judgment. Risk of material misstatement has been assessed as low based on his understanding of, and it is matter of professional judgment. Identify the most appropriate statement. So they are talking about some risk assessment. So just skim through it. So if you skim through it, it was put on record that authority that he had assessed risk of material misstatement low based on understanding of the company. Reason that it's a matter of repent has also been made by him, stating that communication as necessary were made orally to those charged with governance. So that is, you don't have to read the complete thing. See, and to do this skimming, you need confidence in exam. If you are very frightened in the exam, you don't have this kind of confidence to skim through it. Okay, you may say that, sir, you are not giving exam, you're not having time issues, so you may be very free and confident. But then, guys, you need to have that state of mind. Then only you'll be able to interpret the MCQs properly, interpret the questions properly. It was also put on record with authority that he had assessed risk of material misstatement to be low based on understanding of the company. Fine, and he was okay. So he's saying it's a low risk client. Low risk client. Okay. Assessing risk of material is a matter of professional. It cannot be demanded from him how the judgment was arrived. Cannot be demanded. Come on, NFRA can ask the compliance. Every important professional judgment you make, in audit needs to be documented, that how you took this particular professional judgment. Cannot be. If professional judgment is required, that doesn't mean that no one can ask questions. So that is a wrong thing. Wherever professional judgment is required, you need to document that, and you are supposed to answer the questions how the judgment was made. Although auditor has not submitted record on how risk assessment was arrived, it does not affect compliance of 20. It affects. They are asking about true things. Most appropriate. These are all wrong things. No record. It goes on to show non-compliance of 220. It's a repetition of what? It's a non-compliance of 220. Repetition of the first MCQ. Okay. So they have all the right to ask that how you made your professional judgments, and all the right to ask for the documentation for the same. Okay. So answer is C. Now, considering the auditor's point of view regarding engagement quality control review. Auditor's point of view regarding engagement quality control review. Now, see, that's why I'm saying don't mug up. Now you have to go and see, okay, which paragraph. If you see that, okay, this is the engagement quality control review. It was pointed that to him that engagement quality control was not carried out. He answered that no contentious matter arose during the audit and therefore no need felt carry out this exercise. Attention to it done that Ind AS is applicable. If Ind AS is applicable, it's a big entity. Is it a listed company? It's a listed company. It's a listed company. If it's a listed company, then we know that engagement quality control review is mandatory. Engagement quality control review is mandatory. So first, engagement quality control review is mandatory in such type of engagement. It was not proper for auditor to bypass such review. He has violated mandatory requirement of 220. Yes, that looks appropriate. It is mandatory. Okay. B, it is saying optional, so that is wrong. No contentious matter was there, therefore question of not following does not arise. No, it irrespective of whether contentious means complicated matters were there or not, is dependent upon benchmarks established. It is mandatory. It is mandatory. So because it is mandatory, guys, because it is mandatory, okay, so the statement given is not appropriate. It's a listed company. See, the way you study the case is very important. Go to the questions, if required, go to the case. Don't start reading line by line everything. Go and focus on a particular paragraph and then read that paragraph. Okay. This technique of solving MCQ is extremely important. So there are questions from the students, non-essay chapters. First of all, non-essay chapters are extremely important. They are going to contribute to 50% of the paper. 50% of the paper, non-essay chapters. And the second question is whether doing only param question bank will be good. I will say that if you are having lack of time, I have given two things. I have given concept revision also and important questions also. Two kind of videos I have provided. Concept videos of all the chapters and Q&A for all the chapters, and then I have provided important Q&As and important concepts. So I will say that you should first listen to the concept video, then you should go through the important questions. First go through those two videos for all the chapters, and then if you feel it is too much for you to handle and remember, you can definitely focus on important questions and important concepts. Okay. Now the question asked is whether doing the complete question bank will be sufficient. So I will say that if someone is planning to do all the question bank, great, do it. Plus ensure you are doing professional ethics completely, and you are doing important concepts. The points which I have marked important, I have given in the Auditguru Telegram channel. So I will say that, okay, do all the important param questions and do important concepts also. Okay. Majority of them will be common. You may come across something new. You may come across something new in the important concept which I have marked. Okay. I hope you got the answer. Siddharth. Now, considering auditor's reply regarding errors in data feeding, considering data feeding entry by junior staff related to accounting standard, which of the following is proper? Now there is some data problem, data. So I'm simply junior staff. Okay, I'm simply focusing that. Attention is also drawn to the fact that financial statement of company were required to prepare India's. However, at some places in notes to account, reference is made to accounting standard. Reference is made to accounting standard, which are not applicable to company. These errors have been attributed to data feeding and data feeding entry errors by junior staff. Okay, let's see. Now, such examples, clerical errors. Such examples are clerical errors. Okay. Considering auditor's reply regarding such examples of clerical errors encountered during preparation of the report, there is no question of non-compliance. Where Indias is applicable, you are talking about accounting standard. So they are saying it's a very small thing. Let's ignore it. Let's ignore it. Such are examples. Such an example of clerical errors. Again, they are talking. It's a clerical errors encountered during preparation. There is no effect on auditor's opinion. Okay. Such an example of serious lapses. There are serious lapses on part of the auditor showing non-compliance with SA 220. Serious lapses. Serious lapses on part of auditor. However, there is no rated non-compliance of 220. So, they're talking about AS instead of Ind AS. That is definitely a serious lapse. That shows poor quality audit, poor quality opinion. So, answer should be C. Answer should be C. There is a serious lapse. Instead of Ind AS, you're talking about accounting standard. We cannot say that, oh, it's a small thing. See, whether there's a full stop or not, it can be a small thing. If there is some spelling error, it can be a small thing. We're talking about accounting standard instead of India. This is definitely not a small thing. Now, and on your overall reading on case study, which of the following statement appears to be true? The firm has effective system. They have effective system? What nonsense! They don't have effective. Does not have effective system. Sounds good. SQC1 is not applicable. SQC1 is applicable everywhere, guys. SQC is for all type of assignments. SQC1 is applicable to SQC1 not applicable. It applicable to all assurance and rated assignments. So not applicable itself is a wrong thing. Answer is B. Rohit, go through concept revision of chapter 5 and 6. We have given concept revision of 5 and 6 and do all the questions of 5 and 6. Okay. When you're supposed to write case study, you're supposed to write points also. Why you want to take, as such, guys, I don't say that rectify every damn thing, but you have to retain headings and subheadings. Headings and subheadings, that doesn't mean in titanium book we have put headings, it's side headings. It's not possible sometimes to remember everything, but you have in your mind that this topic is there and these are the 4 points I'm supposed to focus on. These are the 5 points I'm supposed to focus on. Okay. So I don't think it's a wise thing not to retain important points of chapter 5 and 6. Okay. I don't think it is a wise thing. Chapter 5 and 6 also, you should treat chapter 5 and 6 just like any other chapters. Just like any other chapter, guys. Now, because when you write an answer, you need to put justifications. You need to put justification. So don't, because I've spoken to Board of Studies and there they have said, in fact, they have said that even some of the essays of the inter are relevant. Students should cover that also. That they have said. Okay. We have provided the videos to our students with respect to essays of the inter level. Okay. But then if you have taken overview of that, that will be sufficient. So I will not suggest such approach. So there is a question. Let's see, guys. So chapter number 1 MCQ we are through. We go to chapter number 2 MCQ. Guys, I think ICAI has given very less explanation. We have given proper explanation in our book. Okay. There is a weightage for that. There is a weightage for that. And we are in CA final. In CA final means expect the unexpected. So I'm not going to suggest not to study those chapters properly. What this, I am not able to understand this question. Can you please distinguish between cases and case study and MCQ? What do you mean by distinguish between case and MCQs? And why is it required? Okay. Why is it required? I don't know. Can you please distinguish case study and MCQ? What do you mean by that, and why is it required? Okay, guys, let's see. Now, so we are moving to the next chapter. Next chapter, considering description of disproportionate rise in inventory quantities. Disproportionate rise in inventory quantities. Which of the following is not likely to be appropriate response? I don't think doing that much analysis is a good thing. Chapter number 5 and 6, there is a clear cut weightage. And case study means it may come in the form of MCQs, it may come in the form of questions. There is no such that only MCQs will be asked and other questions will not ask. Sometimes they don't even follow the weightage they have given by themselves. Sometimes they don't follow the weightage they have given by themselves. Okay. I don't think it will be a good approach because when I spoke to them, they say that in fact some of the inter-level MCQ students should have good command on inter-level MCQs also. Okay. When I spoke to Board of Studies, they said that students should have good knowledge about them also. Okay. We have given soft copy of our latest book, cover at least that much. Now, this will rise in inventory quantities, and let's focus on the MCQ, guys. This session is not for the questions; it's only for MCQs. Okay. This proportion rise in inventory quantities. Which of the following is not likely to be appropriate response to outline risk of material misstatement due to fraud? Which of the following is not likely to be appropriate response to outline assess risk of material due to fraud? So they are saying that there is a drastic increase in the inventory and there is a fraud risk. So if there's a risk, you increase your audit procedures. Which of them is not a proper response? Observing inventory counts of all locations at the same date by employing necessary resources. Inventory count at certain locations after prior intimation. More rigorous examination. They're saying observe all locations, same date, observe certain locations, prior intimation, more rigorous examination of packed items during observing more rigorous examination of the packed items, observing inventory count at the end of reporting period to minimize the risk minimize the risk of manipulation. Let's read where they're talking about the inventory thing. So if I see, okay, first paragraph is dedicated. So that's how you're supposed to scheme through the case study. CA Biswajit is conducting audit of Havemore Limited. He is auditor of the company since last 3 years. And has found nothing unusual in operations and financial statements of the company. Nothing unusual in operations and financial statements of the company. Nothing. Audit since last 3 years. The company has many locations where substantial inventory are stored and lying. During the 4th year stint, he finds inventory have risen disproportionately. So it's a risk. As compared to last, he assessed the existence of risk of material misuse. So there's a fraud risk. So nothing more is given in the case study. Nothing more is given in the case study. Okay. So which of them is not likely to be appropriate response? Not likely to be appropriate response. Okay. Let's see, guys. Many locations where substantial inventory are stored and lying. Many locations. Going for all locations at same date. Certain locations which is not appropriate, not likely to be appropriate response. Certain locations after prior intimation, more rigorous examination of the packed item during observing inventory count process. Observing inventory at the end of the reporting period to minimize the risk of manufacturing. It's look, we are supposed to find out not appropriate. It looks appropriate. Okay. Packed item may not be having proper inventory. Again, looks appropriate. Observing inventory counts at certain locations after prior intimation. Now, going for all location, I think is not appropriate. Because in question they have said that, okay, in question they have said that there are many locations, not all locations. There are many locations, not all locations. Observing inventory count meaning locations. Certain locations look appropriate. Going for all the locations. So I think there is going to be a difference of opinion with ICAI also. I think the answer, proper answer is A. Okay guys, as such we are going to need one more lecture to finish off remaining case studies. So let's do from chapter number 2 to remaining chapters. We'll complete it in the next lecture only. We had a good session. There were a lot of learning and then next session we'll complete the remaining MCQs also, guys. Apart from that, for English, I'm going to come with concept revision from chapter number 3, to chapter number 12. Okay, so I'm taking session with the Chennai branch. So stay tuned to Audit Guru Telegram channel. Audit Guru Telegram channel, where you are going to get all the information. Okay, we'll and there I think there's some controversy with the ICAI answer also. There has to be some controversy. It's fine. Do remember, wherever there are controversies, such questions are generally not asked. Such questions are generally not asked in exams, so no need to worry about that. Okay, don't be worried about that, because they skip out such questions. Guys, stop here, and tomorrow same timing. Not tomorrow. I will keep you informed on Audit Guru Telegram channel. Maybe in the not same timing. Timing may change. Stay tuned to Audit Guru Telegram channel, guys.